We've got Sameer Narayan also joining us this morning. Sameer, let's take a look, since we're just a day away from a budget, on the pockets that we're starting to see a little bit of action in coming in, and some hope that we might see announcements there. There's, of course, a lot of expectation, particularly on the housing side, that there's going to kickstart, that we're going to hear some announcements that will kickstart things on that end. And then, of course, the collateral impact of that. Within that basket, certain stocks, are you also looking at that pocket of the market?
The housing per se is a very large sector from market perspective, because there are a lot of cement, steel, building products, and all of them, they have implications in terms of employment, as well as the fact that it does a lot for the rural economy. So I think from that perspective, housing, some SOPs are definitely expected and would be provided, because there is some amount of lull happening. And I think people are, the expectation of a 3.4 fiscal is actually quite, you're sticking to a number, given the fact that we've seen a lot of cut on the expenditure side as well, because you're seeing revenues not coming in that robustly. There has been a decent cut on the expenditure side. So I think numbers will be by and large met. So now the question is believability. So today, if a number is put out, let's say on the indirect taxes of a 15-16% growth, then all that you do in terms of the fillip that you provide, people have to believe the basic number, that yes, you will be able to hit it. I think that is where is the key now, because I think all the reams that have been published and people have gone through and suggested, the housing is one. You can also see a lot of things that can happen on, interesting thing could be on long-term capital gains. I think from the time it was implemented, we've not seen the market have not done that well. Sure. So I don't think there is too much amount of revenue that could be expected in terms of the exchequers. So what could happen is that you could have a long-term being put in place for 1 to 3 years at 10% and above 3 years nil. I think
my personal view is that LTCG is not going to go back, because it's been a hard reform to implement. It's not a reform; it's a hard tax to implement. And once you've
they're
done,
not going to roll it back for
no,
sure.
once you've done it, you might as well then keep it on, because it's not that markets will remain down permanent. I mean, on a 1 year basis, on a 2 year basis, on a 3 year basis, markets will be higher from where they are. So you may not get your desired tax in that particular year in which you anticipated when you had come out with LTCG. But surely that this is like you've created a toll bridge. And when you use that toll bridge, in this case, investors will have to pay the toll.
At some time you will get the collections,
That's my personal view, because you've already gone through
could it be just another day budget?
well, it could be a policy setting for the next 5 years, so you would know that where is the
From a market reaction point of view, not from what the finance minister will speak.
I think market reaction, perhaps you could treat that it would become a non-event as such, because there is not much that can really come out. Yes, there could be something interesting that could be done in terms of the expenditure and where are you going to do it. So that will have some implications for sectors and industries. But Nikunj, on the point on LTCG, I'm not saying it will be rolled back, but it could be tweaked to the extent that you could keep LTCG, but LTCG would be at 10% from a holding period of 1 to 3 years. And beyond 3 years, you can still make it zero. So I think then you're really incentivizing long-term equity culture.
See, I mean, the whole thing, Sameer, is that right now the need of the hour are two. I mean, one is well known, which is kickstart the economy and raise more revenue. You can only raise more revenue when you're taxing more, or you're funding new ways or new items where you can generate more revenue from. After GST, the leakages are getting plugged and productivity will come back. But I just get a sense that looking at what the direction, I'm using February's budget as a benchmark as to what the thought process of the government is. The same government, but the different finance minister is giving the budget, right? But the underlying thought, the underlying machinery is pretty much the same. So you may hear a lot of mention on roadmaps. $5 trillion, where are we taking the economy, what are we doing to eradicate poverty? Those are standard statements which will be addressed, and they would be addressed, and they will take 30, 40, 50% of the tomorrow's speech time. But apart from that, anything specific which could change, I think tax the rich, perhaps get some more custom duty, do something which has got to do with duty protection. Nirmala Sitharaman, she was also the commerce minister and the defense minister, and now she's the finance minister. She has a very deep understanding of 3 industries. So I just get a sense that you will definitely see some changes on custom duty. You may say some changes on, tax the rich. Inherent in tax, people are talking about it. I don't have a view on it, but that is something which, if it is touched, from a market standpoint, it's bad news.
Yeah, I mean, all matured markets, US has it, for instance.
Yeah, but that's a $20 trillion economy.
But regardless, I mean, if that was any thought process behind implementing an LTCG as well, aligned with the world markets, they also do it. Why can't we? So,
Let's see. Sameer, interest rates will go lower. 50 bips, 75 bips, 100 bips, I don't know, but they're going lower. Are these stocks factoring in a decline? Because just for the benefit of our viewers, these are utilities which do well when we are in a soft interest rate regime. Are markets pricing in all that?
Nikunj, there is an interesting thing happening on the power situation in India. Today, if you look at the thermal PLF, we are running at almost 60% PLF on the thermal capacity, which is roughly about 225 gigawatts. Now, if you look at the way power consumption is growing, I think in another 1.5 years, you will typically reach a 71%, 70% kind of a PLF on the thermals portfolio. Now, if you go back to 2003 is when India had a power shortage. And at that point in time, you again had a thermal PLF hitting at 70%. So looking at the fact that today you're not seeing any new incremental capacity coming up, you're not seeing thermal being the interesting thing, I think India may be in a situation whereby in the next 1.5-2 years, you could be looking at a power shortage in the country, assuming we hit our 7.5% GDP growth and we try and power it through the power route. So I think that is a very clear demand driver, which is a huge tailwind for the sector as such. Yes, you're right. On terms of the valuations, correct. In a soft interest rate regime, these companies' stocks tend to do better. But I think apart from that, there's a larger underlying thesis of the demand side that is right now not perhaps getting priced in. Because still these stocks are still available at 1.5 times book at a 12-15% kind of an ROE. So I think that's where the growth element, the moment market starts getting comfortable on the fact that yes, growth will be available, then one might see very interesting things here.
And again, the same question, Sameer. Do you revisit some of these stories, stocks which are sitting at, solid multi-year highs, all-time highs, a Bajaj Finance, a Titan, HDFC Bank? Has the time come to even revisit some of these names?
From a valuation perspective, yes. But the fact is, only if something else looks cheaper and the earnings growth there looks more believable, that's the time you will revisit these expensive names. But having said that, I think the Cummins may be an interesting play because today the parent is definitely showing interest and commitment both. The power story is just evolving. So in case with the manufacturing growth at 3% in the last quarter of last financial year, you need to fix manufacturing because that's where jobs will come in and that's where GDP growth will come. So I think there is a very strong underlying thesis for Cummins on the underlying demand basis. So I would be watching as to what is the policy reform that come in the budget to be able to fix this.